because Bitcoin is just pure money, right? It's just as effective at 100,000 a coin as 10,000 a coin. And at 1 million a coin, it's just as effective. And at 10 million a coin, it's probably more compelling at 10 million a coin than 1 million or 100,000 a coin. It's kind of a universally scalable asset that gets less risky. The only thing that's going to change, in my opinion, is when it was super risky and scary below 10,000, you were getting 100 to 200% a year annualized gains. And then when it got a bit more understandable between 10,000 and 100,000, your gains go to 40 or 50% a year. And then at some point they go to 30 and then 20. And you know, in the extreme, if everybody in the world understood Bitcoin, it would be 20, 30, 40% of the wealth of the world. So it would be 200, 300 trillion in today's dollars. And then the price would be appreciating at the rate of global inflation in the fiat currency. So if global inflation rate remains at 7, it would still be appreciating at 7. And then it would appreciate a little bit more because of the productivity of the people that adopt it as a treasury reserve asset.
Michael Saylor holds the belief that Bitcoin is poised for a remarkable ascent, aiming for a market cap ranging between $200 to $300 trillion. This projection is particularly striking given today's Bitcoin market cap of $700 billion, suggesting a potential increase of approximately 425 times. Beyond this exponential growth, Saylor anticipates Bitcoin's value to sustain at least in line with global inflation, further aligning with the trajectory of global productivity. This optimistic outlook is rooted in Saylor's conviction that Bitcoin stands as a superior form of money. Expanding on his perspective, Saylor contends that Bitcoin's superiority is a key factor in its potential to outpace traditional currencies. As the video progresses, Saylor delves into the intricacies of his belief system, emphasizing the notion that trading in and out of the market, as discussed, is akin to attempting to catch razor blades. This metaphor underscores the risks and challenges associated with market timing, highlighting Saylor's preference for a long-term, steadfast approach to Bitcoin investment. To gain a comprehensive understanding of Saylor's insights, it is recommended to watch the video until the end. There, he further elaborates on why he views Bitcoin not just as an investment but as a fundamentally superior form of currency in the evolving financial landscape.
So like when MicroStrategy makes money and cash flows, we sweep our cash flow into Bitcoin. So we're dollar cost averaging or we're Bitcoin cost averaging. And when you earn money, if you understand Bitcoin as your treasury asset, every year you make some more money, or every month or every quarter, and so you buy a bit more Bitcoin. And so yeah, the price of Bitcoin is going to adjust up based on the productivity of the ecosystem and the inflation. And of course, technology will just keep advancing. And so technology is going to drive down the cost of everything else, but is not going to drive down the price of Bitcoin. It's going to drive up the demand for Bitcoin and drive up the utility of Bitcoin. So Bitcoin will continue to appreciate due to adoption, technical utility, productivity of the people that use it, and then the fiat currency inflation rate in the frame of reference, whatever that is. And look, if God kings take over the world and they run if an AI ran the world perfectly, smarter than any human being has ever run the world, maybe they introduce the perfect fiat currency and they eliminate inflation in the fiat currency. So the future AI dollar has zero inflation, but it's a medium of exchange, and it's a great way for people to do accounting and the like. Bitcoin's still going up in value because the technical utility of Bitcoin is going to continue, and the productivity is going to continue. And the truth of the matter is there's always going to be chaos in the physical world. There's always going to be chaos in the political world. And that chaos it devalues currency, it devalues physical property, and it devalues companies because it's happening in the physical world, like that tidal wave. But that chaos is going to increase the value of Bitcoin for two reasons. There's a big idea. The first reason is, as people lose confidence in the countries and the companies and the currencies, and their other assets, they'll run to Bitcoin. That's one reason chaos is an engine for Bitcoin. But the second reason is, if you got drunk and you burned down your building, you would destroy capital. If you got angry and you destroyed your company, or you did a stupid thing, like maybe you produced the wrong product and nobody wanted to buy it and you bankrupted your company, you've destroyed capital. If you start a war and you bomb another country and you wipe out the entire city and all their factories, you've destroyed capital. So chaos in the real world destroys capital. But if you get drunk on a Saturday night and then you go swimming and you lose all your Bitcoin because you drop your hardware wallet in the ocean, or if you forget your seed phrase, or if you have it in your head and someone shoots you and it's gone forever, you've actually not destroyed the value. You've actually accreted the value of everybody else's Bitcoin, right? So chaos that destroys your keys and the Bitcoin that's lost is actually not lost. If I burn down half the buildings in the world, you've destroyed half of the real estate capital in the world. But if I lose half of the Bitcoin stored in hardware wallets or in your keys, I haven't lost anything. I've just doubled the value of everybody else's Bitcoin. So you see, chaos strengthens Bitcoin as an asset class and drives more capital into the asset class, whereas chaos is undermining everything else in the conventional 20th century economy. So that's, why I'm bullish on Bitcoin in general. And I think that as other people learn this, if they figure it out, as the education spreads, then you're owning a bunch of capital and you realize, oh my, I'm exposed to chaos on this side of my portfolio and I benefit from chaos on this side of my portfolio. There's a famous book called Anti-Fragile, and the whole theory of anti-fragile is things that get stronger under disorder, right? Things that get better under chaos, right? So Bitcoin is that thing getting better under disorder, not getting weaker. And most everything else, every other idea is probably getting weaker under disorder. I think that anybody has some capital. Anybody that has capital to invest, they should take a minimum of a 10-year time horizon. And I really think a 100-year time horizon is the right time horizon to get you to think rationally. So now the question is just, how do you want to have your portfolio allocated? Some mixture of scarce, desirable assets. I've already laid out the case for why Bitcoin, I think, is the most scarce, most desirable asset. And if you're not going to hold Bitcoin as the scarce, desirable asset, then I think you have to own something else. Like I respect the royal family of Japan or Britain for holding real estate in the middle of their respective cities, right? Tokyo and London. Have a scarce, desirable asset you're going to hold forever. I don't think trading is a good idea for anybody other than a professional. So if you look, maybe 0.1% of the people, if you're a professional with proprietary models and proprietary equipment and proprietary access, you might be able to trade. But 99% of people cannot trade successfully. I don't think I can trade successfully. And if you look at the statistics, if you remove 1% of the trading days, the 1% most profitable trading days from your activity, there is no return. Like you would get a 7 or 8% return per year on stock portfolios if you just hold them for 100 years. But if you take out 2 days a year or 3 days a year, you actually get a negative return if you take out the 3 best days. So if you don't guess the 3 best days, if you're not long the 3 best days out of 365, there is no return. So statistically, 99% of the time, someone's telling you to trade, but you shouldn't. And 1% of the time, everything moves, but generally people can't predict when that 1% is. It'll happen when you least expect it. So trading is, in my opinion, a fool's errand. I think it's a very dangerous thing. And most people are going to squander their capital because they're going to try to outsmart the market. And I think stock picking is equally challenging. I just laid out there's 7,000 publicly traded companies. If you take out the 7 best ones, there is no return. 99 99.9% of the companies can't beat inflation. Okay, so we know which ones can, like Apple, Google. But the question is, did you know that 10 years ago, the reason I was able to buy 17,000 Bitcoin is because I was able to pick Google and Apple and Amazon in 2010 and hold it for a decade with a lot of money, right? But on the other hand, if you picked Amazon in the summer of 2020, you didn't make any money. You know what happened in the summer of 2020? Like, I tell you a real story. It's like when my 3 or 4 year old niece, when she said to me, I like the Big Apple. This was like 2010 or 2008. I said, wow, it's a young girl and she's saying she likes Apple. This means Apple's a big deal. We should load up on the stock. And that was when 98% of the world, or 99% of the world, didn't agree, and they thought it was a stupid idea, and Apple was valued at like 8 times cash flow, and you could have bought it 100x from there or something, just ridiculous. But I thought, yeah, this is a good idea, and I wrote this book, The Mobile Wave, and I actually tell the story in the first chapter of The Mobile Wave about how, my young niece thought Apple was amazing. She called the Big Apple, that was the iPad, and I thought the Big Apple had been New York City, and now the Big Apple is iPad, and this is a big change in wealth. Okay, so that was a good entry point because nobody agreed, but it was unstoppable. That's what I say. The best investment is something everybody needs, nobody can stop, but nobody understands. Right? That's what Apple was. That was what Facebook was. That was what Amazon was in 2008, 2010. Now, in the summer of 2020, you know what my niece told me? She said, I'm buying Amazon stock. Everybody knows it's a winner. Because everybody's in lockdown and they're all basically ordering, like they're ordering their food in, they're ordering their groceries in. Okay, so everybody knows, every 20-something investor, every Gen Z person knows that they should buy those stocks. Well, it didn't work. Right? Because everybody knew it, everybody agreed, everybody needed it, but everybody understood they needed it. And so, in fact, what you've got 36 months later is you have all the logistics challenges, the supply chain challenges, the labor challenges, the inflation challenges, the manufacturing challenges, and everybody needs it, and everybody understands it. But, if the criteria was, do you need it and do you understand it? The richest people in the world would be investors in water companies and electricity companies because everybody in New York City needs water and power. But name me one billionaire in the 21st century that's a water billionaire or electricity billionaire, And the reason why is because everybody understands it. And once everybody understands it, it's getting regulated. And once it gets regulated, it's not an unregulated monopoly. It's a regulated monopoly. They're not going to raise their prices. And people aren't going to, they pay less for their electricity or whatever than they're going to pay for their whatever favorite streaming video thing that's the fad. So, I think that when people, they talk about, the recession's coming or whatever, they're attempting to out-stock pick the market. They're attempting to out-trade the market. They're feeding on your gloom and doom. What do they want you to do? Sell your scarce desirable assets and buy the dollar? They want you to go short. Are you going to sell London real estate to buy the dollar? No. Or they want you to sell your desirable assets and give the money to them. It's like, I wouldn't trust anybody that basically comes to me with doom and gloom and fear and says, whatever your idea is going to zero, so give me your money. You see, the difference is I'm not asking for your money. I'm telling you, keep it yourself. Just, don't blow it. So if all these things happen, then the governments of the world are going to print more money to solve the problem. If there's war, if there's recession, they're going to print more money and it'll drive up the value of scarce desirable assets. If none of these things happen, they're still going to print more money, right? In good years, they're going to inflate the currency supplies, and bad years are going to inflate the currency supply more. And, if you look back for the past 100 years, if you could have bought an acre of real estate in New York or London or Tokyo, at what point would you have sold it? Never. There would have been booms and busts and crises and recessions and whatever. But, the only winning strategy is you hold the most desirable asset for the longest period of time, and you let everybody else panic sell. And I think that's the case with Bitcoin right now. I mean, you hold on to it and let everybody else, trade 7,000 different razor blades.
Michael presents an extraordinary vision for Bitcoin, envisioning its future trajectory. Saylor's conviction, expressed, revolves around the belief that Bitcoin is destined to achieve a market cap ranging from $200 to $300 trillion. This astonishing projection, an increase of 425 times from its current value, serves as a testament to his unwavering confidence in Bitcoin as an exceptional form of currency. According to Saylor, this growth is anticipated to persist, aligning with the pace dictated by global inflation and productivity gains. Such sustained expansion further cements Bitcoin's position as a formidable player in the global economy. Saylor's outlook, discussed, goes beyond mere speculation, emphasizing his strong belief in the inherent superiority of Bitcoin as a monetary asset. The projected growth, as he suggests, is not just a fleeting surge but an enduring ascent that will continue to mirror and outpace broader economic indicators. This narrative, outlined, underscores the evolving role of Bitcoin as a pivotal player in the global economic landscape, substantiating its significance amidst the forces of inflation and increasing productivity. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.